Global markets have been extremely volatile with expectation of possible US interest rate hike. Investors are becoming risk averse. The bigger reason for risk aversion, of course, is what's happening in China. There is a likelihood of an economic meltdown. All the indicators, all the statistics, the figures coming out from China point towards a serious trouble in the economy. Whether it's the real estate sector or the metals or the numbers of inflation, which actually is getting into a deflationary zone in China. Overall, the economic scenario in China looks bleak, and that doesn't augur well either for China or Asia or even the global economy. We have to remember that China is the second largest economy in the world, and if we have a meltdown kind of a scenario in China, that doesn't help the world economy, and in turn it doesn't help most other economies in the world, including to an extent India. While India may be resilient and India may be fundamentally strong, but effect of Chinese meltdown will also be felt in India. Case in point is commodities. I look at what's happening in commodities. I think the global commodity demand 50% comes from China, and if Chinese Chinese economy is reeling under pressure, commodities cannot do well, and Indian commodity stocks will continue to underperform under the circumstances. Aside of the global headwinds, Indian markets and Indian cues are by and large neutral. We had the corporate results which were more or less in line with expectations, barring specialty chemicals and few other sectors which were disastrous. We believe that Indian corporates will continue to perform well. Indian economy remains strong. The GDP growth numbers are strong. Inflation is a bit of worry. However, if the monsoon remains good, the Rabi crop arrival should ease to an extent the food inflation, which we currently are seeing in a big way. Whether RBI will increase rates or not is debatable, but assuming the Rabi crop cools down the food grain prices, the need for rate increase may not be there. However, the scenario unfolding in China and other global markets will be monitored closely by RBI. As far as Indian stock market is concerned, we are in for a bout of volatility, and pretty much that's what is being felt and seen in Indian markets. Investors will do well to remain cautious. As far as long-term investors are concerned, there may be opportunities coming in the near future of picking up stocks for long-term. We like Reliance Industries at current levels based on the performance as well as the possible value unlocking going forward. We also like construction and infrastructure companies like NCC, NBCC, and also like power utilities like NTPC and Tata Power. Investors will do good to buy into these stocks for long term. Thank you.